What to do, airheads? Aere here, back for another video. We're talking about divergences today. This is the 8th video in our TA series. Link down below. Start at video number 1. I'm telling you, that's where you need to start. What divergences? So trends, right, are a series of highs and lows, right? Lows, lows, lows. That's your trend, right? Momentum, as measured by many indicators, right? Cipher B, RSI, MACD. I mean, really any indicator is a measurement of market momentum. That's a measurement of the strength of the trend. If we as traders can spot divergences in that momentum, right? So we have a higher high here, right? This was that market top. This was that March, kind of April, February top of 2021. We kind of crashed down to that bottom. Then we went up, made a new high in November of 2021, right? There's that 69,000 giggity high. But if we take a look at any momentum indicator, right? We made a lower high. So that is where a divergence happened in the strength of the trend. So while we were making higher highs, we had all these shitty influencers out here calling for 100K Bitcoin year end. And you had me and other like actual traders saying, well, hold up a minute. The trend's slowing down. Do we have a potential reversal? That's what you need to ask yourself. You don't just automatically close your positions and enter into a short. You need to, that needs to be a warning sign to you and says, hold up a minute, right? I need to look into this a little further. You know, with that in mind, this video is incredibly relevant because it explains what happened here. You have all these, you know, whale charts, whale alerts, and shitty influencers on Twitter and making open mouth thumbnail videos on YouTube, blaming Elon Musk for selling his Bitcoin. You have some crazy theories out there about why we dumped. And I'm here to tell you, well, number one, it looks like Musk didn't even sell that, right? It was just a bunch of freaking bullshit. I'm here to tell you it doesn't matter, right? We knew, I knew, I've been talking about this now forever. I said get out at like 31.8. And why did I say that? Well, it's the same thing. You had your high, right? We had our high. This was that high kind of from April of 2023, right? There's your high. And then we had a higher high. This was recent, right? The beginning of July, where we had that XRP news, we pumped up. But, you know, everyone calling for, and I got excited too. And you got to get excited. You got to take these things one level at a time. I get it. It's good to be excited. It's like we have one big giant candle and everyone's mentality changes, and that's fine. But you gotta look and pay attention to what's going on, because what's going on was, right? There's that divergence again. We made a lower high on RSI, MACD, Cipher B, on all the indicators. So that's where I said, you know, hold on a minute. You know, if we don't cross that 31.5 level, right, we're coming down. So you need to be ready for both scenarios. Or if this doesn't happen, right, this divergence is going to play out, and it's going to play out hard. There's a lot of different divergences, and there's hidden divergences as well. We're going to teach you how to spot them, how you can use them on multiple time frames, what time frames are best to spot bigger trend reversals, and get you this tool in a sweet video. You know, this stuff is dry, but you know what? If you don't know this stuff, you're gonna fail. So let's just get into it. So when I first started out, I lost, right? As most people do. That's why I'm making these series, these videos, to maybe help get you a head start from where I was. When I decided to take this seriously, when I had enough of just kind of jumping in, of throwing myself to the wolves, I dissected every little single thing. It is information overload when you start. I get that. There is so much to learn. I just said to someone in Discord today, they said, man, there's so much to learn. Do you ever get overwhelmed? I said, yeah, but man, imagine being a doctor. I mean, they go to school for 8 years, then they're in residency for 2 years or however long it is. I mean, they have a 10-year process just to become a doctor. Lawyers, you know, same thing. Any type of profession that you're going into, you need to learn the ins and outs of that profession. You're just, like I was saying, money's not going to just fall into your lap. You need to work harder than everybody else. Trading is no differently. Not saying this to brag, but I make more money than a doctor or a lawyer. I just do. Maybe not some at the top of their fields or whatever, but I do. So what's different? Why would my career, my job be any different than becoming a doctor or a lawyer or any type of professional, right? It's not. So what I did, when I decided to take this seriously, I had enough of losing. I looked at it and I said, there's a lot to learn. I need to learn this. So I'm just going to learn one thing at a time, and I'm going to learn everything I can about it. So if you just Google divergences or trading divergences or what is a divergence, there's a million articles on it. I read every single one, and I learned every single thing I could learn, so I could articulately explain it to someone if they asked me about it, right? And that's what I would say you need to do with every single little thing. So I'm doing this series in parts, right? To just give you a little bit of time. Hopefully you watched the video ins and outs and listened and took notes. And then that's where I turn the keys over to you, and it's your turn to learn everything there is about everything I talked about in that video. I give you a plate or a toolkit. I toss you the tool. It's up to you to figure out how to use that tool. You know, I do the best I can in a short video to explain it the best I can, but trading divergences and understanding momentum, right? So I'm going to explain it real fast. I kind of already did, but price momentum is measured by the length of short-term price swings or long-term price swings. Steep slopes and a long price swing represent strong momentum, while weak momentum is represented by a shallow slope and short price swing. Momentum indicators include the RSI, stochastics, and the rate of change. MACD, Cipher B. So divergence is the disagreement between indicators, and they can have major implications for trade management. So I have a lot of this information in Discord. So if we just take a look, right, I'm going to open my image here so I can, there we go. So you have regular divergences and hidden divergences. So a regular divergence is when the price makes a high and then a higher high, but whatever indicator you're using to measure momentum makes a high and then a lower high. That's a regular bearish divergence, right? So what's a bullish divergence? Well, that's where the price makes a low and then a lower low, but whatever indicator you're using makes a low and then a higher low, right? Well, that could indicate a reversal or a price goes up. There are hidden divergences as well, and we're going to show you examples and explain this for you guys. But so price makes a high and then a lower high, but whatever indicator you're using, let's just say RSI here, makes a high and then a higher high. So you can see how they diverge from one another. So that's a bearish divergence. So price should go down more. Bullish hidden divergence is when the price makes a low, a higher low, but the RSI makes a low and then a lower low, right? So that is a bullish hidden divergence. Here is what a divergence is not. So we have a lower low, right? A lower low by itself is not a divergence unless the divergence happens on the price. So you can see here, right, where I put my cursor on this peak, right, and look up, right, we made the top. So that was a little top there. And then when I come down here, it's a lower price. So it followed. There was no divergence there. The RSI is pegged to the price of, in this case, Bitcoin. So there's no divergence there. So just because you make a lower low or a higher low for, you know, bullish divergence, that doesn't mean it's a divergence. So if it follows the price, that's not a divergence. Where it diverges from the price, then it's a divergence. Now that being said, if the price did not dip here, so if we just cancel that out, right, or it dipped a little bit, but then made a higher high, right, then that would be a price divergence. Like I was saying, here's an example of a higher time frame. This is a weekly chart. So typically I say the divergences are stronger on the higher time frame charts, right? We could find this probably on the monthly too. When you dial into the daily and you zoom out, you kind of lose it a little bit. So I find, in my experience, that weekly is the best. So here we go. Price is going up, right? There's your strong trend line, price going up. You know, you could even draw it on the bottom here if you wanted to, right? So this is a trend, right? Low, high, low, high, low. So you would think we're going to make another high, right? Maybe a $73,000 Bitcoin. People were calling for a $100,000 Bitcoin year end. But traders who pay attention to this stuff, right, and who, you know, study and who at the top of their game saw, you know, let's find this high. Well, first of all, we made a divergence there, right? There was the first one. And then, I mean, really, you take the two tops and there you go. That's a giant divergence. That is a giant divergence. So the price is going up, but we're cooling off. The trend's cooling off. So a lot of people said, you know, hey, if we can't hold this level, right, we're coming down and we're crashing. And we did. We crashed hard. I mean, we all know what happened. Now compare that to the current trend that we're in, right? So price kept on going up, kept on making higher highs. You take a look at the momentum from the peak to that next peak, which was a higher high, right? So we were, 30K here. We were, almost 32K here. Momentum cooling off. So that should raise a red flag. Again, what divergences are not are trade signals. So you don't want to find and see a bearish divergence or a bullish divergence and just blindly enter a trade. You don't want to do that with anything. You want to put all these tools together. This is used as a warning sign. It should flash an alert to you if you find these and see these. And it's going to take a while to train your eye to find this stuff. I get it, but you need to learn it. But it should just raise an alert and tell yourself that, hey, there's a bearish divergence that could play out. That's why at that 31.8 level, right? At that 31.8 level, I told myself, if we can't crack this, if we can't flip 31.8 or 31.5 to support, we're coming down. And there was a lot of other factors involved in this downturn, right? I mean, the economy, the spots being at an all-time low. There's so much, right? But this is just confluence that, hey, we're probably going down. While influencers, a lot of them out there, we're calling for more upside. So let's find some examples of lower time frame divergences and how they can help you spot potential price reversals. So here we go. So we have a low and a lower low, right? This is just a recent move. So if we go to the price, right here. So that's your low. And then we go to the next one. Guess what? Higher low. So that is a bullish divergence. And then look what happens. The price goes to the moon. That's exactly how this played out, right? There was your lower low on price, but the Stokes, the RSI, the MACD, everything made a low and then a higher low. So that's exactly what happened. You had your slant down, slant up, price went up. Now we're switching it up a little bit. So we are going to scalp 1 minute time frames, right? And we're switching it up. We got RSI off of there. We're using VMC Cipher B. This is a free version of Market Cipher B, a powerful indicator. So here you can see we have a high and a lower high, right? But down here on the momentum waves, you can see we have a high and a higher high. So it's a divergence. This is a hidden bearish divergence. And then what happens? Right there, we crash to the downside. So if you would have scalped that, of course, you would have used other indicators and stuff like that. But it's a 0.5% scalp. If you were 5 times leveraged, that's 2.5% scalp you just made there in a few minutes. Here's a spoiler alert for you. VMC Cipher B, so Fu Manchu Cipher B, right there. Pause the video, throw it on there, plus divergences. This indicator will pull some of the divergences for you automatically when you're starting out. This is going to help train your eyes to spot divergences. The paid version of Market Cipher B doesn't have that. This one has it built in. Now, granted, this one hasn't been updated in like 10 years or something, 7 years. It hasn't been updated in a long time. So Market Cipher B is still better for a lot of reasons. But this is a good free tool. It's a good starter tool to get you learning and to get your eyes to spot them. So if you go into the settings, you can see you have to turn on the hidden divergences. I turned off the regular ones, but you can, and then, turn them both on, click OK, and then it pulls the divergences for you. Double check them, right? Always make sure that it's pulling the right information. Certain divergences are going to be stronger. Obviously, the steeper the slope, the stronger the divergence is going to be. So this is going to be a stronger divergence than this. Not always, but probability-wise, it's going to be. But this is a great tool. Use it. And that's the video. A 15-minute video giving you a powerful tool to show you the divergence between price action and momentum, right? Between the movement on RSI or momentum waves or VWAP. You can use this anywhere, right? So this is a powerful tool. It's how a lot of us got those warning signs at the top of the market. It's how a lot of us got the warning signs at this most recent market structure. There we go, right? Between this kind of 30K top and this like almost 32K top. You know, there's other factors there, but that's called finding confluence. That's what all these videos are, is throwing tools in your toolkit so you can use them all to become a better trader. I'm going to link the starter article for the divergences down below. Start there, learn everything you can about divergences. And then same thing with all the previous videos, right? So a lot of the videos that I have covered have been over a specific certain topic, right? So if we go to the playlist here, for example, you know, book map or understanding CVD, learn everything you can about CVD, know it inside and out, and then move on to the next thing. You got to start knocking these things out one at a time. But start at video number 1, work your way through it, guys. Hop in Discord, discord.gg/alpha. Aere, first 100 people who join, who are active, who talk, who contribute, are going to be grandfathered into any type of pay gate I do in the future. Yes, I'm going to charge for my time. If you're taken away, if I'm taken away, not you, if I'm taken away from my family or my trading, I'm going to charge for it eventually, right? Right now it's free, so take advantage of it. And first 100 people are going to get free lifetime subscription to it, who helped me build this thing. On top of that, my Twitter, twitter.com/alphaaere. Give me a follow, like, comment, subscribe. That's the video though. I mean, I showed you examples, showed you how it can be used in any time frame. I explained what divergences are. I don't think I need to make this a 50-minute video. I think I gave you the tools, explained what they are, showed you some examples. I showed you how we called the both of the market tops with it and how it can be important. Keys are in your hands now. Take it, right? I've led you to the water. You know, I can't make you drink it. You got to drink it on your own. That's it. I'm actually going to work on another video here, which I think will be another good one for you guys. Hopefully I'll get it out over the weekend. Otherwise, later.